Hi folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite sector. It's the fintech. Fintech is a very emerging segment, and especially the younger generation, they don't want the traditional financial market. They want to deal with it on a digital basis versus traditional way. So with that, from a projection perspective, fintech market is valued at about 127 billion in 2018 and expected to grow to 309.98 billion through 2022. So as you can see here, a lot of these companies are really working to make sure there is no traditional paper money. It's all digital money. And also, a lot of these companies are making fintech more efficient and really changing all the way the back office is maintained in today's world. So with that, let's dive into few of these companies and go from there. So my favorites in the fintech world is SE. It's a C Limited from Hong Kong. They're into e-commerce and they're into fintech also. It's a very good company. Next is Square. Square, as you can see, started as a small company by Bill Dorsey and really a prominent player in the digital fintech world. Third one is Build.com. So Build.com really is a newer IPO, and they're really changing the way all the back office applications are dealing with with the manual way. They're automating the entire back office. Think about bill payment. Think about all the accounting stuff. Next is MercadoLibre or MELI, and this is one more Latin American company. They're into e-commerce, digital payments, and they do, they are combination of, America's um, Amazon plus PayPal. You could think along those lines. A very good company. Next is PayPal. PayPal is really, between Square and PayPal, they are really, obliterating the traditional way of, credit card and banking in general. And they're into digital. So PayPal is really doing very well. It was one of the company co-founded by Elon Musk a while ago. Next is four or shift four payments. These guys, started as a hospitality type payment, but they're going into all sorts of mobile fintech world of late. Next is StoneCo or STNE. It's a Brazilian company, and they're doing very well when it comes to fintech. BlackLine, they're again, steady Eddie accounting type company, and they're into digital, accounting and back office, and they're doing very well. They had a little bit difficult quarter. I think it was Friday, and stock tanked a little bit, but good time to buy. A very consistent company. Next is PagSeguro Digital. It's again a very good company and $61.82. And next is Green Dot. Green Dot, it's been public for a couple of years. Very steady Eddie type company. They do a lot of this. They provide service to a lot of the companies. They are pretty much in the background. You don't see Green Dot logo much, but they provide the service in the background. Intuit, it's famous when it comes to tax preparation, accounting. They also have a QuickBook. It's a very good, steady Eddie company doing very well, and they're all about digital as we go. Next is Affirm. Affirm is again just a recent IPO. They want to change the way you pay on installments. Instead of putting it on credit card, they help you to pay as you go in an installment basis versus credit card. Even these two, Lufax and Sapiens, they're also good companies. Next is nCino. nCino is a little newer IPO, maybe 6 months or so. It's again a very good company. They provide a lot of services to the banks and doing very well. But stock, did not do too well in the past, but I'm sure this will take off as we go forward. Last but not least is Blucora, again a digital fintech company, about $17, which is a low dollar amount as you can see, and good growth as we go forward. So with that, let's look at the profile of some of these companies. First is C Limited, it's a Singapore-based, mobile platform company. They engage in multiple things. They're into gaming. They have digital entertainment, e-commerce, and digital financial services. About $141.35 billion company, and 79% approve the founder and CEO of Forestly. Next is Square. Square, started as this little company a couple of years ago, but now they are $122 billion company. They are giving, the traditional credit cards their run for their money, and there they have Square Capital, Square Terminal, Square Payroll, and whatnot. Most of these SMB and smaller companies they love Square, and 90% approve the co-founder and CEO Jack Dorsey. Next is Build.com. Build.com is a pretty recent IPO, about $15.63 billion company. They want to make sure it's very easy to do bill payment, and they leverage artificial intelligence, and they will also help you to really simplify all the back office accounting type work, and very good company. 88% approve the founder and CEO Rene Lasarte. Next is MercadoLibre, MELI, $96.90 billion company. It's a Latin America's very prominent company, and they offer e-commerce, and they do buying, selling, advertising, even the fintech, everything. 96% employees approve co-founder and CEO Marcos. Next is PayPal. PayPal is again, it's a democratizing financial services. It's at the forefront of digital payments. A couple of years ago, folks kind of doubted, PayPal can make it in the new world because of MasterCard, Visa, multiple of these credit cards. But clearly, PayPal had done very well in the past. They've even done better than folks like Visa and MasterCard. About $349.45 billion company, and 93% approve the CEO Dan Schulman. Shift 4 Payments is next, and ticker symbol 4, about $6.5 billion company. It's a recent IPO. They provide integrated payment processing and technology solutions, and 80% of the employees approve the founder and CEO Jared Isaacman. Next is StoneCo. It's about $28.40 billion company, provides a cloud-based technology platform, and it's really a Brazilian company as you can see here, and it's really doing very well. Next is BlackLine, ticker symbol BL, about $7.64 billion company. It's a cloud-based software platform, and they transform the accounting and finance operations. 91% approve the CEO here, Teresa. Next is PagSeguro Digital. Pags, about $20.27 billion company. They are also into fintech. They focus on micro merchants, small companies, medium-sized companies. So with that, let's look at the numbers and see why some of these companies make sense from a long-term investment perspective. So with that, these are the 24 companies. The ones in bold are my favorite. Doesn't mean other companies are not my favorite. They're also doing very well. The whole fintech industry is really catching the fire and doing extremely well. So with that, what I look for in these companies is one, the 1 year performance. I want 1 year performance to be double digit, and I want the revenue growth to be double digit, and the gross margin to be clearly more than double digit, or at least double digit, high double digit. So with that, C, Square, Bill, these all make the cut, even Pags. And as you can see here, impressive revenue growth, which is double digits, and impressive gross margin. And then we got Green Dot, Intuit, Sapiens, Lufax, Affirm. And all of these, as you can see here, most of them got a double digit, except for Lufax, which is a recent IPO. It did not have an entire year. So again, impressive growth in the Lufax holdings also. Affirm is very recent IPO. Again, they got 97% revenue growth here. Last two companies are nCino and Blucora. As you can see here, these companies have done very well from a one-year revenue growth perspective, and also they got a good gross margin. So, you know, we should usually look at the revenue growth and gross margin as we see our investment thesis, because you have to grow the top line, which is revenue growth, and you got to make sure that your bottom line from a gross margin perspective, you're really using your efficiency and your controls to make sure you don't spend too much money and streamline your operations. So with that, let's go into the performance, the monthly performance. So as you can see here, SC, which is a Hong Kong-based company, they have done very well. It's a monthly performance from February all the way to November. They have done consistently very well. In the future also, I would think this company will do very well. Same story with Square, except for one or two bumps in the road. They've done very well. So, and Build.com, it's a little recent IPO, probably in January timeframe. They've done very well. And MELI, it's again, MercadoLibre. It's a Latin American company doing very well. This has got wild swings at times, but done very well. PayPal is again they're into the digital payments. They're doing extremely well. And Shift 4 or 4, they're a recent IPO, and clearly they did a little bit. They had a little bit bump in January, but now they're doing very well. So with that, let's look at performance in multiple time frames. So if you see here, C Limited consistently on a weekly basis 7.54%, monthly 21%, quarterly 63%, half year 115%, 1 year 475%, year to date with just about 2 months or so 38%. Clearly you can see here they have not given up. They have been consistently doing very well. So I would think this will continue. And same story with the Square, Bill, MELI, and whatnot, with the exception of BlackLine here. BlackLine came down a little bit after the earnings. I'm sure it's a little bump in the road. I'm sure it'll do very well. And global payments, Green Dots, Intuit, Sapiens, they've been doing consistently steady Eddie type stock, been doing very well. And GPN, Lufax, nCino, Affirm, some of these are very recent IPOs. As you can see here, there is nothing, quarterly, nothing half year. These are a little bit newer companies and doing extremely well. Especially Affirm, it's a very recent IPO, and really, striking a very good chord when it comes to millennials and younger generations who don't want to, apply for credit cards. So with that, let's look at two companies in a little more detail. First one is Build.com. So Build.com is a back office cloud. These guys they have artificial intelligence to reduce the manual work and provide cloud workspace. From an announcement perspective, the core revenue increased 59% year over year. Total payment volume was up 40% year over year. Transaction fees increased, which is a good sign, adding to top line. And they served, more customers, about 27% more customer growth. And they processed more payment, 40% year over year. Overall, they had a very good vibe in the earnings announcement, which is a good sign. And from a number perspective, on a quarterly basis, clearly you can see here the market cap itself, started all the way from 2.75 billion back in 12/31/19, and now it's $11.21 billion. Consistently growing the market cap, which means they're grabbing the market share aggressively. From a revenue perspective, as you can see here, Started with $39 million, now they're into $54 million, and they've been providing positive earnings surprise all along, not even a single missed earning. And same story on the EPS side, earnings per share. They've been providing positive earnings per share all the way. And meanwhile, on the gross margin side, they've been consistently in the 74, 75, 76 range, which is very, very healthy. And they're not making a profit right now, especially because they're investing in their platform. On a net margin basis, they're still on a negative side, burning some money with the R&D and in innovation itself. Stock price is about $190. I think it's a solid company going forward. It is still about $11 billion company, can grow in the future. And if you look at the technical perspective from a chart, it's a 12-month chart, 1-year chart. As you can see here, after the earnings, stock has shot up nicely, and now it's kind of trying to settle down a little bit. And clearly, if you look at DMI, we have the blue line above red line, which is a good sign. Stock is gaining momentum, and the momentum indicator here, the ADX line itself, it's going up, which is a good sign here. So overall, this is a good sign that company is doing very well. From a volume average perspective, as you can see here, more people are buying the share. And chocolate money flow perspective, money is kind of stabilizing here. It's doing very well. So with that, from a technical perspective, it's a good buy. I would wait, a little bit for a pullback, but I would initiate some position right here and hold it for a long time. With that, next company is StoneCo, which is a Brazilian company, cloud-based technology platform. And from the earnings statement, clearly, growth has accelerated, about rapidly, margin expansion, which is good. And they also grew their TPV 114 and 48%. And their SMB business has really, been on the fire after the Corona pandemic, 50% year-over-year growth. And they got strong recovery, and they've been adding new clients. And overall, I think they got a good growth and good projection in the earnings statement. And from a market cap perspective, they've been clearly consistently growing the market share, which tells us they are really becoming the leader and grabbing the market share from other companies. And from a revenue perspective, they had a couple revenue misses in the past, but clearly since last year or so, they've been surprising on the revenue side. And on the EPS side, I think they had one miss back in March, but solidly as of now they're giving positive EPS surprise. So with that, I would think this is a good company to invest in, very steady Eddie. So I would really initiate some position. So with that, in summary, if I go back here, so the ones in black are clearly my favorites, and all of these are very good companies. And if you want to invest in a low price stock, I would pick things like Mitek here, and you could even look at IIIV, which is I3 verticals, and even GreenSky and Blucora are really low price stocks. You would invest in that too. And other companies, C Square, these are all very, very solid companies. You could buy the stock, or you could even do call options and hold it for long term. So with that, in summary, fintech is here to stay. Even after a coronavirus recovery, folks will be using more and more digital payments versus the actual cash, or even credit card. They would rather do digital payments. So this trend is here to stay. I would really recommend you to invest in fintech and take it from there. Happy investing. Thank you.